traders, welcome to the TMT stock market strategy video for Wednesday, September 7th. We did get an ISM number yesterday, and that was less than expected, showing contraction in the economy, and yet the markets are pushing or at least staying at all-time highs. So totally crazy way of looking at the markets. And that's only because well, now the Fed is not going to raise. The market participants think Fed's not going to raise in September, maybe December, or not even at all in 2016. So you buy the market, which is totally insane. However, it's not what I think. It's what the markets do. And as at the moment, we continue to be in a range, almost 2 months, all of July, all of August, and we're in now the third day of trading in September. And yes, the markets are quiet still. This is the first week back from school, from work, and a lot of the market participants, they just start to come back today, tomorrow. So we should see a pickup in volatility, hopefully, sometime next week going into options expiration. But nonetheless, guys, extremely quiet, and markets are well bid up, continually being well bid up, and it's just something that we have to just sit and wait to see what happens and trade out of this range. So we either trade out of this range and go to 2200, 2250, or we start to break down here, and there's tons of support below. So I don't see us going anywhere. If anything, a mild correction of 2 to 4%, which is probably get you to 210 in the spiders, which I'll show you in a moment. Let's get right to it. Here's the VIX. You could see here Bollinger Bands are tightening, has been tightening. So we're building energy here. So it doesn't tell you which way to go, but if you're at these lows, and may I add, the VIX has been the most heavily shorted since the inception of this asset class. Okay, so this is very dangerous if you're looking to continually short the market. But yes, a lot of retail speculative traders are shorting the market here in the VIX, which would be insane. All you need is one catalyst, one negative headline news come out, and the VIX is up $5, $6, $7 from the low. So that to me is crazy. But yes, and that's something that I wanted you to run by you to let you guys know. VIX heavily shorted, most short interest since the inception of this asset class. The equity markets are one of the most heavily long-sided trade, I believe, since 2013. Okay, and we have margin interest at its highest since 2013. So that tells me that everybody's happy and complacent and buying stocks on margin. So that's something that you have to be cautious about, especially if you're a longer-term investor. To me personally, I would not be adding any type of longs in this area here. I would wait till the markets give some sort of a corrective pullback. McClellan Oscillator, haven't showed it to you, but I will tell you that we are in a neutral state of the market. You can see that at 498. Energy is building on the Bollinger Band, so we'll just see which way this thing breaks out. And once this breaks out, then you would follow that trend. At the moment, we are elevated here. We're in a fully priced in market at 19 to 20 times earnings. So we'll have to really, you have to really rethink that for the swing trader or the longer term investor. Day trader, not so much, but you really need to see if we could break out. Let's go into rates. We have the 10-year here. I put this beautiful ascending triangle, measures up to the 185 area. We did break down from that, but it's okay. As long as it holds within the Bollinger Bands. Now, if we take out this little prior swing here, this swing low, then I would say, yeah, we're going to rates will probably run right back down to the July lows. I don't think that's going to happen. I do believe that rates have bottomed. Okay, and remember, higher rates is lower bonds. So that's something to consider. Now, speaking of bonds, let's look at the TLT. We're in a consolidation symmetrical triangle. Usually this is a continuation pattern, but when you're at these tops, really anything goes. You can see how the MACD recycled right back to zero from being heavily overbought in July. And same thing you could see here in the slow stochastics, that we're just kind of going into another symmetrical triangle in the stochastics, if you see that. And RSI is at 50. So let's wait for the breakout, get that confirmation, and then trade the breakout. Okay, that's probably the safest bet that I can tell you. But if bonds start to break out again, it's just weird because usually bonds are up, equity markets are down. So bonds are up yesterday, and equity markets were up yesterday, and gold was up yesterday. And I understand the dollar got crushed yesterday, so that does put a a damper on certain asset classes as well, or actually it benefits certain asset classes, I should say. But still, guys, you got to be careful here because nothing is correlated anymore. Everything is just, well, everything is one side correlated. Everything goes up, except the inverse as the dollar. If the dollar goes down, you have bonds going up, gold going up, and equity markets going up. Well, somebody in the room is wrong, and we'll see what happens down the road. But just keep an eye on that. But trading bonds here and rates, let's see if this thing could break out to the upside and or to the downside. But remember, watch the false breakouts. When you have um, consolidation like this, they know where the stops are, and I mean they, meaning the market makers. They know where the stops are, so they pop the stops up, they get you long, and the next thing you know, the thing starts to fail miserably. So just be careful with that. Next is going to be gold. I just want to show you the weekly chart of gold. I like gold a lot. I don't like gold up here, these areas. Yes, can it run to 1380? And yeah, can you get 20 points out of it? Sure. You can get 20 points or you can lose 40. So that's something to me that I'm watching closely. As you can see here, we're above the 200 and we're above the 20-week moving average. But if you looked at the Fibonacci retracements, we didn't even get to the 38% retracement. We're still elevated at these highs. And yes, you can look at this as a bull flag on a weekly, which is great. But I'm not a fan of looking at chase stocks. Here's the daily chart of gold. All right, it's a continuous contract. You can see 13.0, I think 13.07 was the low. I was looking for 13 to 13.04, which is close enough for government work. And you can see here we have this little uptrend channel, uptrend line that held, and we got basically not even to the 38% retracement here. So I'm looking for a pullback to this zone area, 1260, 1280, even 1300 again, and see if that can hold, and then start to nibble in gold right around this area. Because I mean, gold did go from 2000. It's only been about uh, um, 9 months, and we've been elevated at these highs. Okay, and remember, gold doesn't do that for no reason. So just keep that in mind as well. Here's the GLD to ETF. Okay, you can see a nice 3-day move up, but you can see the oscillators are actually quite weak. On this move up here versus here, you can see we were at least back up to these elevated areas where we're not even close here. Okay, so just keep that in mind in the GLD. The GDX, same thing. I'm looking for a gap fill right up in here, about 29 bucks, and then there's another gap, small gap area about 30. So another, let's say another $1.20, and then we're going to look to see if this starts to roll back down again. And you can see here our RSI and MACD, again, MACD very, very weak here on this 3-day push up on no volume, no less. So GDX may do a gap fill and then fail. And we'll see what happens here because we're coming into the proprietary price channel and the uptrend line. Next, we're going to take a look at the spiders, go right into the indices. And again, guys, there's really no change here. Yeah, we sold off and then we moved back up on the ISM, but we're still within the range. Dollar increments to 217.5, 216.5, 215.5, and 214.5. That would basically take that 14 low. This is really where we need to get taken out. That would take the 50-day moving average out, and I eventually see 210 in the horizon. All right, look at the volume. Volume has diminished since Thursday, and this is something that to me is a huge concern. A lot of people don't trade volume, don't look at volume, but at the end of the day, you want to see volume confirm any type of move, and this did not. So I do treat this as suspect, especially when you have a 2-month consolidation here with really no movement. So we'll see what happens. And as day traders, it gets a little frustrating because you take a look at the 60-minute. Look at this chop. It's just been horrendous. No trend at all. Neutral state in the market. And it's something that us traders have to just wait for. Here's the transportation sector. And again, you can see the Bollinger Bands here starting to pinch. Energy is building. And let's see if the transports can take out the swing high. And then this other swing high behind it back in April. Then you might have something here that we move to new highs. And for what reason, other than the Fed printing money, is really not a reason, but you got to follow price, unfortunately. The macro picture is horrendous, and there's nothing you can do about it. The technicals are just saying that, look, we're going to go higher, and that's what we got to do. You got to look for your spots during the course of the trading day. IWM, same thing. You can see here it's been in a sideways range, pretty much RSI all of June, July, August. Other than the Brexit dip, but you can see we're still in this uptrend channel, so next target would be the top of the channel. And lastly is the Qs. A lot of the so-called FANG stocks, Amazon, Google, Baidu. They all did very, very well yesterday, pushing Qs to all-time highs. That number 116.15 really is gonna be the key and pivotal support area. So if that's the case, we lose that, we'll get to the top of the proprietary price channel. But until that happens, guys, it's hurry up and wait again. Hope it helps. We'll talk to you soon. Take